What's up, everyone? It's Scotty with Moneyvest. So markets here rolling over a little bit, down about 60 to 90 basis points on both the S&P and the NASDAQ here. We got the FOMC minutes coming out later this week. Not to mention, we do also have Nvidia's earnings being reported here. I believe that's going to be tomorrow. So if you come over to Nvidia, I just want to take a quick look. And the earnings, of course, semiconductor stocks did see a pretty significant pullback. It was down a little bit over 4% on the day today. And yes, Nvidia is reporting tomorrow on Wednesday, February 21st, after the markets close. So we're going to find out exactly what the hype is all about. And we're going to take a look at the numbers, obviously, and we'll see all the actual analyst estimates kind of scramble to go up. Targets kind of fluctuate a little bit depending on where Nvidia ends up being for its earnings. So hope you all enjoyed this video and find it helpful. Make sure that you drop a like and don't forget to subscribe to the channel. If you're just joining us for the first time, I would really appreciate that, and links to our Discord and Patreon is also going to be down below if you're interested in joining us. There's still a few more spots left with that 16% annual discount, and I'm also happy to share that the Moneyvest website is coming along really well. I was kind of playing around with the entire website yesterday, and the functionality is absolutely amazing. And if I basically just show you guys a little bit of a preview, and just give me 1 second here. So this right here is what the website, as you guys already know, kind of looks like. As you can see, Moneyvest.com up top, you can search for any particular stock, ETF, or index or whatever. If you come down a little bit, you've got the trending analysis, right? So if you click on any of these headlines, it takes you directly to the source, whether it's MarketWatch, CNBC, whatever. And then, of course, you can also track your portfolio. So if you come over to investment, come over to portfolio, you can connect your brokerages, enter your holdings manually, and analytics, it's going to show you the portfolio value, the total profit, the returns, holdings, breakdowns, based on assets and sectors and classes and currencies, all these different stuff. Then you can track your dividends. So all that's going to be available over here as well. Future payments, then you got your performance of the portfolio, based compared against the S&P 500 or any other metrics you choose. Based on different timelines, you got your metrics. So this is going to tell you the portfolio's metrics itself, the performance, the price earnings, the sales, risk adjusted return, all that good stuff. And we got a lot of built-in calculators as well that are going to be coming online and live. And then finally, you of course have your entire watch list. You can create new watch lists. You can name whatever you want it to be. And then we're going to be building the community, courses, and account tab. But one more thing that I want to mention here is the stock page, right? So if you basically look at this right here, this is what the stock page is going to look like. So right now we're looking at Apple. And if you scroll down a little bit, right, so it's going to show you the Moneyvest metrics. You can kind of scroll down all the income statement, balance sheet, and the cash flows as well. You got your different news carousel for Apple itself for that particular stock. You got the Moneyvest metrics that are broken down into 5 different buckets. It's going to tell you how good the quality of that stock is. You got your fundamental analysis, which obviously is broken down into income statement, balance sheet, cash flow. You can kind of toggle this between different years. So if you want to look at 5 years worth of data, you've got that. You got to look at 7 years worth of data, 10 years worth of data. You can scroll all the way down, look at all these different items, and then of course valuations. You've got your analyst estimates also there. What are analysts talking about on this stock? What's the price target for them? Consensus EPS expectations and revenue expectations over here. And then you've got your insider trades also listed out. And then finally, you've got your stock analyzer, which obviously is going to allow you to calculate the price, the fair value of that stock. Hit calculate, and it's going to show you everything you need to know, the calculation itself, market cap, the present value, and the sensitivity grid, which we have talked about on our Excel spreadsheet. Like, this is all of our Excel documents, all of our models, financial models presented on the Moneyvest website. And this right here, of course, is going to be the macro dashboard, which gives you an overview of the market temperature. How's the S&P 500 doing? And this is only tip of the iceberg, folks. I mean, there's so much that's coming. Eventually, we've got the S&P 500 RSI reads. And then more importantly, we've got interest rates. So we've got the next FOMC meeting calendar. We've got all the expectations for the Fed funds futures. We got bond market. And then, of course, we've got a calendar, which is both economic and earnings calendar, which is going to be available for members as well. So there's lots and lots of data here that is going to be available. And I'm super excited to share all of this with you. So if you want to get early access, and this is only, like I said, only the tip of the iceberg. We've got so much more ideas and so many data points to include and visualize for all of you. That's going to be included on the Moneyvest.com website for all of you. So again, the link's going to be down below if you want to join and be a part of our Moneyvest community. And would love to have you on board. And I'll be sharing the beta with all the members in March, and we're going to get started. And there's going to be a feedback feature as well, where you can provide us and myself and my team feedback with what features you like, what features you don't like, and what are things that you may want to include. And of course, not include, what are things that you're looking forward to, stuff like that. So that's obviously going to be available for everyone as well. So again, link's going to be down below if you want to join. Now, the NASDAQ here down almost 92 basis points, almost 1%. S&P also rolling over. So stock market 2024 outlook, Goldman hikes the S&P 500 price target to 5,200, which is very common, very normal. As a lot of the price targets get achieved, a lot of the analyst estimates and a lot of firms are going to raise their price target in 2024. So Goldman Sachs chief U.S. equity strategist David Kostin is getting more bullish on the stock market, and Kostin bumped his 2024 year-end S&P 500 price target to 5,200, representing a potential upside of about 4% from current levels. And this is the second time Kostin has increased his 2024 target, and it's the first set at 4,700 objective in November, and then increased it to 5,100 in December, and now it's increasing to 5,200 in February. And he basically mentions that increased profit estimates are the driver of this revision. Our upgraded 2024 EPS forecast of $241 stands above the median top-down strategist forecast of $235 and reflects our expectations for a stronger economic growth and higher profits for the information technology and communication services sector. So if you do the real math here, 5,200 divided by 241, we're looking at a price to earnings multiple of 21.5, which I guess is reasonable. It's not crazy, but also not the best in terms of valuation, in terms of undervalued or cheap levels. So I would say it's somewhat reasonable. 21.5 is okay. Now, Ed Yardini also sees the S&P 500 could soar 30% by 2026 is what he's talking about. So again, he's got a price target much higher, but 30% in 2026 for the next basically 3 years. So 2024, 2025, and 2026, 30%, that's 10% per year. That's about average. So this is not really a prediction, but it's really just kind of talking about the average return that we've seen over the last 100 years from the S&P 500. Maybe a little bit higher than average because it's been about 7 to 8% on average. So 10% per year is possible. Now this right here is the entire market. Tesla, Amazon, Nvidia rolling over, Apple, Microsoft also selling off. And one more thing that I want to mention here is that my Amazon calls and my Enphase calls were both profitable, both out of the money, doing really well. So again, if you want to trade options and learn how to sell options the correct way, link's going to be down below for our Discord. But I think it's really important for people to understand how to hedge, learn how to hedge, and how to de-risk a little bit, and how to sell options so you can generate passive income and cash flow, while at the same time also benefit from the market selling off, and you're not kind of always in this constant bullish or long sort of positioning, right? Selling options allows you to be long, but at the same time benefit from a market pullback and a sell-off, which I think is very important and very advantageous for long-term investors and even for traders as well. So this right here is the entire market. So again, consumer defensive and utilities starting to push higher a little bit. Everything else was down and red. In the last 1 week, again, we've got a little bit of a split market. Financial, healthcare, defensive, utilities all pushing higher, with cyclicals, communication services, and technology rolling over. In the last 1 month, we've got all sectors pushing higher, with real estate the only sector that's selling off. We got natural gas and cocoa prices pushing up, with lumber, rough rice, and sugar prices selling off. Bitcoin here just a little bit over 52,000. And Ether just over $3,000 at the moment as well. Now this right here is the valuation. So again, based on forward price earnings multiple, don't let energy or basic materials or utilities fool you, because even on a PEG ratio basis, they seem to be a little bit more richly priced. Technology 24, 25 is expensive. We've got real estate. I would ignore the PE multiple because it basically trades on price to funds from operations. And then we got consumer cyclicals at 18 and consumer communication services at around 16, 17. I would still argue that comm services is still the best priced sector. It's far more reasonable than compared to other sectors because the PEG ratio is the lowest, one of the lowest, and the actual forward price earnings multiple is also one of the lowest. So I would argue that financial sector trading at 12.7 times earnings multiple on a forward basis and 1.3 times PEG, and comm services are the two sectors that are somewhat very attractively priced versus some of the other ones that are still trading at well over 18 to 20 price earnings multiple with a PEG ratio well over 2. In some cases over 3, and energy, of course, trading at over 5. So in that regard, I think financials and communication services are two sectors worth looking into from a dollar cost averaging standpoint, because they are still, in my opinion, somewhat fairly priced at the moment. Now going over to the markets here, volatility here did spike a little bit over 4.8, almost 5% on the day here. So red rectangle sitting between 11 and 12 is going to be one to watch, and resistance all the way up to 18 to 20 for volatility as well inside this green rectangle. As we already know, when the VIX is high, it's time to buy. When the VIX is low, it's time to be cautious and not really particularly go unless, of course, you're trading. But if you're a long-term investor, be on the lookout, because when the VIX spikes, we obviously know what happens to the market as we sell right back down. Crude oil prices here just consolidating sideways, so resistance is going to stay put at 79, close to $80 a barrel at the moment, and support level is going to stay put at 73, $74 inside this green rectangle as well. And we've got the yields also kind of trading above that 4.2, 4.3% level, with the actual spreads sitting at negative 30, 32 basis points, and we're starting to see a little bit of that pushback for the yields once again. So the spread, again, very close to being positive, still negative 30, 32 basis points at the moment. Now coming over to the S&P 500 first, did see a little bit of a pullback on the day, down about 60 basis points. It really is consolidating sideways here, so we didn't really make a higher high. We didn't really go higher than the previous time we touched 5,030, so 50.30, and we started to kind of gap down here, fill this gap, and we're starting to roll right back down. So there is some weakness here that's brewing underneath for the S&P 500 in terms of price action, with the RSI and the MACD showing signs of weakness, not to mention that negative divergence is also playing a big role for S&P as well. So resistance at 5,045, support level is going to stay put at 4,800 for the S&P as well. Talking about the NASDAQ here, and NASDAQ also kind of rolling over a little bit, selling off, and we are starting to see that drop of almost 1%, a little bit of that negative divergence that continues for the NASDAQ as well. Resistance all the way up to 16,100, support level is going to stay put roughly around here, inside this green rectangle between 15.15 and 15.4 for the NASDAQ at the moment. Talking about Apple, and Apple here also selling off. It was pretty much the entire Magnificent Seven, big tech companies, all of them were down except for Google, which was slightly green. But Apple here also coming down, once again being oversold, coming down to that support of $180. If it does end up breaking down, the next support is going to be in the 160. So 165 is, in my opinion, going to be a much better level, much better pricing for Apple to be dollar cost averaging a little bit more aggressively in. Amazon, on the other hand, closed at under 170, so obviously it's been selling off, and I do have calls a 170 strike, and what you'll notice, 170 call strikes are now up close to 60% for me, and I will be closing them out here fairly soon with a resistance up to 176. We've got a little bit of a gap to fill, and support level is going to stay put down to 155 for Amazon as well. Talking a little bit about Tesla, and Tesla here on the day also selling off, down about 3%. At one point it was down lower, down in the 180s, but this right here, again, lots of consolidation. We're seeing the RSI, we're seeing the MACD kind of rotate back higher a little bit, but the last couple of days, of course, have been a little bit more weak. This is going to still be a resistance for Tesla. That's going to be inside this $200 to $215 level, so between 200 and 215, very important level of resistance to watch for Tesla here. And that is something to keep in mind for this company, for this stock as well. So that is the sort of resistance. And right now we're still seeing some potential momentum back up, but it's going to take some time for us to see a bigger breakout beyond that $200 level. Talking about Nvidia. Now, Nvidia have earnings tomorrow. Very important numbers coming out. And we're seeing a little bit of a pullback from $745, $750. Again, very overbought, with the RSI showing signs of weakness. MACD also crossing below that signal line at the moment, and support level, obviously, as you guys already know, it's going to stay put in the low 500s. We don't know if we're ever going to get down there, but that is still going to be that level to watch, because this has just been a very parabolic, greed-infused rally here for Nvidia at the moment. Advanced Micro Devices already starting to break down from that symmetrical triangle that we talked about. So there was lower highs and higher lows being formed, and right now we're starting to see a bit of a breakdown below this symmetrical triangle, but we do still have somewhat of a near-term support here, sitting at 157. So we keep a close eye on 157 here, and if you do end up, let's say, breaking down below this level, next support is going to be down to $130 per share for Advanced Micro Devices. So that is going to be that next level to keep in mind for AMD. Now, talking about Meta, and Meta Platforms here also rolling over a little bit, down about 33 basis points. So selling off, and this right here is the gap that it needs to fill, and support level is going to stay put down to $383 per share next, in case we see a bigger sell-off here for Meta. RSI MACD continues to be elevated, continues to be a little bit higher up there. So I wouldn't be surprised if we do end up seeing some more potential downside here with the support level sitting put at $383, with the RSI and the MACD also showing signs of some weakness. And if there is potential downside, then this gap will eventually get filled. Next up, we've got Microsoft and Google among the big tech Magnificent 7 Core 8 stocks here. And Microsoft here also rolling over down about almost $400 from its highs. It is rolling over down about 4.6%. Support level is going to stay put at 384 down to $366 per share. So those right there are going to be a couple levels to keep in mind, all the way down to $340, kind of aligned with that 200 simple moving average as well. Very much within the context of this higher high and higher low. And those right there are going to be support levels to watch for Microsoft. And last but not least, we got Google. And Google here also basically flat at the moment, and we're seeing it back up to 142. This is a very, very important level of support to watch for Google. And right now it's kind of bouncing off of that level a little bit. And RSI has been coming down. MACD is still oversold at the moment, and resistance is going to stay put at 150, 151 for Google here. So hope you all enjoyed this video. Very quickly, I'm going to also break down Enphase and PayPal here for everybody, because I plan to do separate videos, as I mentioned, sector analysis videos for these specific stocks. But Enphase here also rolling over back below 130. So my call strike was 130 and down about 3%. So those calls are, once again, they're up a lot, and I will be closing them out fairly soon. And this right here is the entire analysis. We're getting rejected at that resistance of 138. So it's not a surprise, and support level is going to stay put in the low 100s once again for Enphase here. And PayPal here on the day also, I think, was down a little bit over 1%. So we trading as low as $58. This right here, again, lots of consolidation, so down almost 1%. And support level is going to stay put at $50. There's going to be a much better, stronger support here at closer to $57 for PayPal as well, with a resistance back up to almost at $60, $61 per share. So hope you all enjoy this video and a complete update on the markets here. So let me know your thoughts down in the comment section below. And don't forget to join our Discord and our Patreon if you want to get early access to the beta launch in March for the Moneyvest.com platform. You've got a lot of features coming your way when it comes to fundamental analysis, macro analysis, and just a lot of visuals and data points. It's going to help you make better investment decisions. As always, happy investing. I'll see you all in the next video.